Hello everyone, my name is Nikita Kostikov and this is my final presentation for MBA 690 Strategic Management class with Dr. Curtis Beck. The company is ExxonMobil and today I will present the strategic analysis I've been compiling for the past 8 weeks. I'll start with the internal analysis of ExxonMobil, which is company's strengths and weaknesses. Company's greatest strength is its strong market position in downstream and chemical segments, and company is the largest producer of refining crude in the world, with 37 refineries in 21 different countries, and company is also one of the largest petrochemical companies in the world, with the capacity of 90% of its chemical products being able to be produced, in the downstream manufacturing facilities. Company's valuation is also the highest in the industry, according to Fortune 500. It's valued at over $350 billion, which is the highest in the oil and gas industry. Also, company's profit and revenue has risen 6% and 19% respectively in 2018, according to the resources, where company's profit was reported at over $20 billion and revenue was reported at over $290 billion in 2018. The company's weaknesses are its annual revenue that has been down 45% since the oil price drop in 2013-2014, which is less than $50 per barrel. And that affected the company significantly, as in 2013, company reported over $600 billion in revenue, comparing to what I just said in 2018. Company's lower quality of research and development and technologies, and its efficiency also is lower than the direct competitors like Shell, BP, and Chevron, and that's putting a huge pressure on the company because they're investing the most capital and most resources on it in the industry. However, it doesn't really produce the quality and the efficiency that it needs to gain a larger market share comparing to the competitors. Also, the company's bad reputation due to the oil spills and climate change controversies also have been damaging company's image, according to its stakeholders. For instance, in 1989, Exxon Valdez spill has occurred, and also the climate change controversies has been going on since 1980s. External analysis will represent the opportunities and threats of ExxonMobil. Some of the greatest opportunities for ExxonMobil are its increasing demands for energy in the Middle East and Asian markets, demand for liquefied natural gas that is expected to grow over 40% by 2024 in the Asian market, and actually it's expected to grow by over 100% in the North American market. Also, constantly increasing fuel prices all over the world. That's a good opportunity for ExxonMobil to capitalize on that fluctuation of price, especially the one that is going up, as the company has presence in over 20,000 stores all over the world through brands like Esso, Exxon, and Mobil, selling high quality fuels. Some of the threats are the competitiveness of the crude business all over the world. That includes public companies like ExxonMobil and state-owned companies like Sinopec or Saudi Aramco that pursue the strategic objectives of their government owners. OPEC, which is the Organization of Petroleum Exporting Countries, is also another threat, as it controls over 80% of the world's oil reserves, and it also impacts prices and production quotas as well as the supply. It controls the supplies of oil production in the world. The next thing that I'm going to move on is the Boston Consulting Group matrix, which compares the divisions of ExxonMobil by revenues. As we can see, the highest is the downstream division with $221 billion reported in 2018. Chemical division is the second one with $32 billion reported in 2018, and upstream division is the third with $26 billion reported in 2018. As we can see, downstream and chemical has this highest industry sales growth and rate, with the actually highest relative market share position for the ExxonMobil would be downstream division and upstream division. And upstream division is something that the company should pay more attention to, as liquefied natural gas and other energy resources are at very great demand right now. So as we scroll through the next slide, that would be really combined SWOT and my recommendations together. However, you'll see recommendations written out on the next slide as well. So one thing I really want to pay attention to is the SO strategies, as you can just look over the ST, WO, and WT strategies on your own. Joint ventures and partnerships with key players in the Middle East and Asia are recommended for ExxonMobil, since over 7 billion barrels of potential oil resources are right now in the Middle East, as well as a company has existing partnerships with Qatar Petroleum that produce over 5.3 million barrels of oil per day. That is a great opportunity to maybe gain more partnerships to capitalize on their sustainable growth and sustainable subsidiary and capacity opportunities, like National Iranian Oil Company and also Abu Dhabi National Oil Company. As far as Asia, Asia accounts for almost 10% of the world's oil production as of 2018, and it is expected to grow to 32% by 2024. That region is mostly led by state-owned companies from China and India, like Sinopec or Oil and Natural Gas Corporation. I would highly recommend invest more money in research. Not invest more money, but invest smart, invest efficiently in research development and technologies for shale gas production, and put all those resources that the company has to provide the sustainable growth for diversified revenue streams that company has already have, through low-cost liquefied natural gas supply opportunities company has been taking advantage of through the economies of scale. Last thing that it is important to remind that ExxonMobil has a great operational capacity, and that's its great strength comparing to the competitor. If we are comparing the company to competitors, Permian Basin and Guyana, those particular refineries will be in the leading position and the key driver of growth for the liquefied natural gas and upstream performance for the company, as it's forecasted to add 3.2 billion gross oil equivalent barrels. Lastly, I'm just going to summarize that ExxonMobil is right now one of the leading oil and gas companies in the world. It's definitely leading company in the United States, and actually has a great sort of affection on the American government as well. So, for example, strategic alliances with Chinese companies will really greatly put ExxonMobil to the position where they can support, where they can take their, when they can take their minds away from the trade war with China, right? As well as the company has to really put more attention on improving the company's image through environmental responsibility. As for example, Darren Woods, current CEO, has a really good reputation in the industry, and if he could come out and take stance for the ongoing ethical issues of the company, that would be really good for ExxonMobil going forward. And lastly, I wanted to thank you for your time and considering my recommendations. So I would really recommend going through my slides and reading my recommendations more carefully, as I might be scrolling through them it may be a little bit fast. Here are the references that I've used, and once again, thank you for your time and recommendation and consideration.